by the end of the day, we need to look at what is already priced in. Uh, I've been very vocal 3-4 months back that Europe was stuck in a big mess, that we needed to price electricity prices at higher levels, and that natural gas prices were also too low as a consequence of the ongoing mess with Russia. But by now, we cannot be negatively surprised on the supply side. And I mean, given what's already priced in, I struggle to see the negative news coming out anytime soon as a consequence of Russia playing in its entire hand already.
So, Andreas, you've been engaged in some pretty intense conversations on Twitter over this EU energy situation. And you said something this morning, tweeted out something this morning that I thought was really interesting, which was when I am interviewed in European media, it's you guys don't get how severe the situation is. In US media, calm down, it's not that bad in Europe yet. So what did you mean by that?
Well, if you look at the consensus in the US, first of all, it seems as if most people expect the European economy to run out of energy before the end of this heating season, by the end of March next year. I don't find that to be the base case. So I disagree with that consensus in the United States. If we look at the European consensus, at least if you look a few weeks back, it felt as if most politicians, they expected this to be a non-issue, basically. And they didn't really take any notice of the bizarre developments in the natural gas and electricity markets. But I think the tide has turned a bit in the European debate over the past couple of days, actually. So the needle is moving very, very fast on this story in Europe right now. Politicians are stuck in debates on how to handle it. And I'm slightly more optimistic today than I was just a few weeks back when it comes to the European consensus on this story. So I think the truth lies somewhere in between the consensus in the US and the consensus in Europe.
Yeah, even though that consensus is shifting. Why has the conversation... So you've been really active tweeting about the energy situation, and rightly so, I think, because it is one of the main issues for everyone, certainly for different reasons, but for Europe. Why has the conversation been so intense? I mean, I see you sort of duking it out, it's an American expression, like in battle, in these heated debate on Twitter. Why is that going on? What's happening around this energy conversation that's created, these extreme views or swings?
I mean, first of all, a couple of days ago, I was contacted by the Danish intelligence service, and they asked me whether they could investigate if I was the target of a Russian shitstorm on my Twitter profile. Quite interesting whether that's true or not. But it seems as if there is a narrative that Putin holds all the cards, at least on the right wing of the political spectrum in Europe, but also to a certain extent on the left wing, actually. So the extremists in both ends of the spectrum in Europe tend to think that Putin holds all the cards. I'm not necessarily sure that he does so. We can get back to that discussion, but it's quite clear that there are groups within the European society shooting at European politicians for bringing us into this mess. And I, by the way, agree with that narrative. I think we hold ourselves to blame to a large extent for this current crisis. But by the end of the day, the question is whether Putin holds all the cards or we do. And I think, again, the truth sort of lies in between those two poles, because both Europe and Russia are stuck in a big mess. It's not only Europe.
Well, that's so interesting, because I mean, I feel like I have been, feeling that those extremes, especially for those not sitting on the continent, the sort of worry going through when you see all the headlines, and it's not just, it's traditional media, it's on Twitter, it's kind of everywhere, that, oh my God, they're running out of fuel, they're going to be freezing, they're going to be people without heat. I mean, it's really, maybe you could say it's the doom porn out there, but that it's a crisis that's going to cripple Europe, that there is no solution, that they're running out of time, like a ticking time bomb. I mean, it's been really worrying. Is it motivated by politics? Do you think this is sort of the type of, I know you don't know the answer to this, but it's sort of speculatively, or motivated by the same kind of social media sort of bot that we saw take place with the U.S. election. That's a really interesting that the intelligence reached out to you with that. Is it must be that they suspect that as well.
I mean, there is a truckload of Russian misinformation floating around on social media right now. I've tried to debunk quite a few of those myths surrounding that Russia holds all the cards in relation to this negotiation versus Europe. And I think that's one of the reasons. I think Russia is clearly meddling with the social media activity in the West in relation to this question. But let me just emphasize that I think it's fair that we discuss whether Europe will run out of energy or not, because currently we are basically in the hands of Mother Nature when it comes to this question.
Exactly, where we often find ourselves. So with that context now, that there's a lot of misinformation out there are a lot of maybe political motives all over the place for making this a really extreme conversation. Let's try to sort of dig beneath those headlines and figure out or give us your best sense of what's going on in terms of supply and demand and the sort of mechanics of how this market's working. So very broadly, first of all, where are we with supplies for Europe?
Well, they are not as bad as reported. I think that's sort of where we are right now. Russia basically closed off the Nord Stream 1 pipeline a few days back. So the flow from Russia to Germany is right about zero now. There are some indirect flows via China and some indirect flows via the Netherlands, but the direct pipelines from Russia to Germany, they are now closed. And I guess that is sort of the base case for at least the foreseeable future, that Germany will not receive any flows from Russia at all. But we should remember that Germany has other suppliers than Russia. We've seen a rapid increase in the import of liquid natural gas from the US, from Qatar, from Norway, and even to a certain extent, a couple of African countries. And Europe is able to at least partly cope with the downturn in Russian gas flows via the inflow of liquid natural gas from the seaside. That's one thing. The second thing is that Norway is doing its best to sort of keep up with demand in Europe. So they are basically filling pipelines to an extent possible from Norway to Germany and elsewhere around the European continent. And we should also remember that Putin is still sending gas to the eastern parts of Europe via pipelines, and also to a certain extent to Turkey via the Turk Stream pipeline. So there is still gas flows. There are still gas flows from Russia to parts of Europe, but not directly to Germany. But interestingly, over the past 2 to 3 weeks, German injections into natural gas storages have been record high. And I repeat, record high. We've never seen injections into natural gas storages at this pace before in the German economy. That's quite interesting, given all of the flow reports that we see in the media, right? So the natural gas storage will be 100% filled by mid-October at the latest. And that allows a bit of time to plan, I think. The German storage sites, they contain roughly 2.5 to 3 months of natural gas. And we should remember that there is still a flow, even with Russia cutting off all of the supply to Germany. That flow is roughly around 60 to 65% of the usual total flow. So it's not that bad. And I mean, on my calculations, if we get like a neutral to mild winter in Europe, we will actually make it through just about with storages intact. So it's not that bad. But obviously, if we get a severe winter and a firm heating season, so to speak, then we'll run out of gas. That's kind of inevitable.
So this is what you're saying, that the real wild card here is Mother Nature and the forecast for the winter. Do we know, I mean, farmers' almanacs aren't perfect, but do we know what the expectation is?
Well, if we look at the 5-year average of the heating needed in Germany and elsewhere in Europe. If we just take that 5-year average, we will probably make it. So we need a worse winter than what we've seen in recent years. The usual winter is a lot milder than 10, 20 years ago in Europe as a consequence of climate change. So I think there is a decent chance that we will actually make it through. Whether we get a cold winter in 3-4 months from now, I should probably refrain from forecasting.
And we really get suspicious that you have a crystal ball. So how much can conservation efforts contribute, or is it just nibbling around the edges? We've heard about the maybe changing some shifts, with companies. Are those things, do you think, going to be put into effect regardless, just in case the weather's colder? And do they really make a difference?
I think the target is 15% worth of reductions in the natural gas consumption over the winter season. And I think that's manageable without too large production halts. We all, by the way, already see production halts as a consequence of the price increase. So we probably don't even need to force them upon the corporate sector, right? They will do it voluntarily due to the price increase. So by the end of the day, I actually think that the economic activity will take care of this kind of itself, given that production halts are already sort of the name of the game in parts of the European industry as a consequence of high prices. So it is essentially the market taking care of this via the price channel rather than politicians forcing production halts to happen. So if we look at the year-to-date statistics for Germany, as an example, the natural gas consumption is down more than 10% versus last year. So it's already happening, basically.
Yeah, that's true. And I want to get to the price action because this is so important. And there were some headlines this week that were, I think, so concerning. And I, want to see if we can kind of wade through some of that and make some sense of it. But so if you get through this winter, I guess the energy bulls, if we want to call them that, are those that are more worried about Europe's ability to deal with the situation will say, okay, if you get lucky and you get a mild winter, you get through this winter. But this is a multi-year problem. So you've gained yourself some time, but it's not enough. And so there's still this massive vulnerability.
I think it's fair to say that currently we're debating this winter, but I guess the issue is still there in a year from now. So I guess we will move between extremes when it comes to market activity in Europe over the coming 2 to 3 years, from one extreme to the other when it comes to the pricing of electricity and natural gas, because I could envisage a landslide in electricity and natural gas prices over the next 3 to 6 months. But I think we will see a rapid increase in the price of electricity and natural gas at the exact same time next year, because we don't have the time to solve the supply issue in 12 months. That's simply not a feasible scenario. But for now, I think the interventions made by European politicians will actually allow the market to calm down quite a bit. And we can get back to the details on what happened last week in European electricity markets.
Well, let's talk about this, because I think this is really important, because it's kind of feeding into this doomsday scenario as well. So not only do you have shortages in supply, but you have this massive, these ridiculous price charts that you can't even wrap your head around. And the idea that anyone can sort of survive that, or you don't get through that without massive business failures, massive personal pain. So what are we seeing in terms of price action? First of all, does the price action match up with fundamentals in terms of supply?
Not at all by now. I've spent most of this week in telcos with various power trading desks around Europe, and they all tell me the same story. The main culprit behind the melt-up that we saw in European electricity futures over the past couple of weeks is the so-called clean spark spread. And allow me to elaborate, because I know this is technical
explain what that is.
It is basically the electricity equivalent of the so-called crack spread that we know from the oil market, right? So it represents the net revenue that a power generator makes from selling power on a forward basis, having bought the gas and the carbon emission certificates needed to produce the electricity. And what happened was that the electricity price in forward terms, so the 1-year future of German electricity and French electricity, melted up like a Bitcoin chart last week, while the input costs of natural gas and carbon emission certificates didn't follow suit, which basically meant that the spread between the price of sold electricity and the purchase price of the input in the power plants melted up to an extent that we've never ever seen before in history. It went from roughly around 50 euros per megawatt hour to more than 400 euros per megawatt hour in a couple of days only. And when that happens, the power generator holds a very negative market value in the contracts on electricity sold forward. It's very usual that you as a utility or a power generator sell electricity forward to clients. So in 6 to 12 months time, I'll deliver this amount of megawatt hours for this price. And at the same time, you obviously cover the input costs by buying the natural gas and the carbon certificates forward in time as well. But when the price of electricity explodes to the upside, the power generator will have a massive negative market value on that derivatives contract, but they won't have the same positive market value on the input contract on natural gas because of a smaller price move compared to the move in the electricity price. And ultimately, when you get a very large negative market value in your derivatives contract, your counterparty will ask you to post collateral, a so-called margin call, right? And the move was so intense that these power generators and utility companies, they simply had to buy back the derivative contract to ensure that the liquidity squeeze didn't get any worse. So that was why you got this price move in the electricity future spiraling out of control to the upside. And right now, I know that politicians in Europe, they are negotiating on a so-called liquidity package for utility companies and power companies, basically needed after this liquidity squeeze in the future contracts. And I think this is the exact reason why we see a sharp retracement in these future prices right now. And I think we need to go much, much lower before we actually find the fair value or the fundamental value relative to supply.
So why would that have happened? Is it a product of just the crisis, or does it seem like something else going on? Because it's not anything that anyone has ever seen before. It's not the way the market should work, correct?
Yeah, I to quote Jared Dillian, I think a lot of assholes were involved in this trade. So we know by anecdotal evidence that a lot of hedge funds got involved in this long electricity trade. And I think this positioning squeeze basically spiraled out of control as a consequence of the lack of liquidity to post as collateral in these derivative trades. So this is kind of reminiscent of what happened in 2008, 2009 with the LIBOR interest rate in the US, because that was also a liquidity-driven issue by the end of the day. And this is a liquidity issue just in the electricity market. And I mean, we saw these huge numbers coming out on various news outlets last week. I think at the max, I saw figures around 1.5 trillion euros.
Yeah, and we saw
reported.
that, and I was like, this is not good. I mean, I don't care what market it's in. When you see margin calls that high, then something's not working, and then I would have the worry of a cascading effect at that point.
Yeah, and I know for sure that a couple of big European banks had amounts equaling like 30 to 40% of the entire balance sheet blowing in the wind at that point. So it was a crazy market, something that felt kind of reminiscent of the Lehman crash, right? But thankfully, politicians learned a lot from the 2008, 2009 crisis and stepped in with liquidity very swiftly here, because otherwise it would have been a big mess.
Did the hedge funds that maybe had, or the a-holes in the trade that had that, so did they make a killing on that, or did they get caught up in it when the officials acted quickly to restore liquidity?
I think a lot of them made, if not billions, then millions in this trade, because I mean the move was so swift, and they could basically utilize the liquidity from these power generators being in trouble, right? So I think they could handle the situation because they were on the right side of this trade, while the power generators and the utility companies were not.
Yeah. And, I think that we're used to seeing this in sort of, the world of hedge funds and investment banking and those who are, in the business of risk. Different scenario when you're in an energy crisis and utilities are stuck in the middle of this with all the consequences around that. So I'm sure there are going to be a lot of officials who are looking really closely at the quarterly performance of some of the hedge funds that were involved and have some questions to ask if that is indeed what happened. We don't know for sure. Okay, so has the situation fully resolved itself, or is the potential for something like that to happen again?
I think it has resolved itself, given that politicians have now ensured the liquidity of the electricity futures market, which was basically a prerequisite to get the price down again. But we're still far from fair values or fundamental values in the electricity market. I think we will go much lower in coming weeks. But the next question is now, who's paying the bill for this mess, right? Because politicians have now guaranteed a lot of lending to power companies, some of them being in trouble liquidity-wise still. And if we look at the size of this liquidity bailout, I would argue that we are already surpassing 5% of GDP given in guarantees to just this small subsector of the energy market. You should add that on top of other bailouts given to households, to corporates, etc. We will see more of the same, by the way, over the coming months. So I wouldn't be surprised that when the dust settles, the European politicians will have guaranteed or even outright spent more than 10% of the nominal GDP on an annual basis to solve this crisis. That is a lot of new public debt coming to markets.
Well, spent 10% of GDP to solve the crisis. Actually, it's to band-aid it, right? I mean, it's not really the solution to the long-term energy crisis. That's a whole other conversation about investment that has to happen. This is just to keep the wheels from coming off, right?
Yeah, exactly. I mean, they are kicking the can down the road at the cost of 10% of GDP. And they will probably have to do the same next year unless there is a miracle on the supply side before then.
Yeah. And I mean, their backs are up against the wall because if they had let these, I mean, it was not a choice, really, it sounds like. I mean, they had to, the market was seizing up, not working. And we know the consequences of that if you start having your utilities going out of business belly up at a time when you're in the middle of an energy crisis. So, hard to see how they had any other option. But this is now a short-term outlay that was not anticipated, even if you were already counting on payments to consumers and businesses to help them get through this period. This is an additional now fiscal stimulus coming on top of all the other investments. And then you have the long-term issue of trying to wean yourself off of Russian energy.
Yeah. So I saw a Swedish politician tweeting around the latest Swedish liquidity and bailout package that they could build, I think, 2 nuclear reactors for the same price. But obviously, they've now decided to spend that exact amount on bailing out everything over the next 3 to 4 months. So this is a really short-term solution to a long-term issue, right? And it probably makes it a whole lot tougher to actually find the money to make the right investments in terms of supply.
Well, right. It's a capital suck, right? I mean, you've just sort of like ran up the credit card on an emergency issue that came up, but you've still got this larger problem on your hands that's going to require a lot of capital.
Yeah, definitely. And I mean, the only hope for Europe over the next 2 to 3 years is that we settle some kind of deal with Vladimir Putin. Because otherwise we will be stuck in this same supply mess again next year. I simply don't find it feasible that we will get enough LNG capacity online over the course of 12 months to make up for that lack of supply from Russia on the natural gas front. You can substitute natural gas to a certain extent. You can start using heating oil instead of natural gas, for example. But I mean, we're still talking about 25% of the overall energy consumption in Europe being natural gas as of today. That's a lot to replace, right? Even though we get 60% of the usual flows, you still need to replace right about 10% of the overall energy consumption in Europe in a matter of a year.
Yeah.
I don't think we've ever managed to do that.
So wouldn't that argue that kind of Putin is holding all the cards, if that's the case.
Well, I think if we look at the Russian situation before we get to that question.
So from a European situation, short term, it's neither extreme. We suspect that there is a lot of propaganda and disinformation campaigns around that. The storage is full. With a decently mild winter, they'll get through. But the governments have just spent a boatload of money they didn't anticipate in order to calm a market situation that came up. And they're still faced with the long-term problem. So that's kind of where the Europeans are. So let's talk about where the Russians are and why maybe that is leading you to believe that it's not all Putin's game to play.
When it comes to natural gas, Maggie, the Russians, they don't have any other clients than Europe, basically. And that's the interesting thing here. I've seen a lot of people on Twitter telling me that the Russians can just sell the natural gas to other destinations. But I have to emphasize the infrastructure is not in place to do so. You can either ship the natural gas as LNG via the seaside to, say, Japan, China, India, etc. But that's very cumbersome, and they don't have a lot of spare capacity on the LNG side. So right now, only 16% of all Russian natural gas exports are made out by LNG, and that is essentially the max capacity right now, unless they build new terminals, they build new ships able to transport the LNG, and that will take years. The other solution for Russia is to build a pipeline from north of Murmansk, so the very northern part of Russia, towards Finland and Scandinavia. The biggest gas fields are placed up there, and I mean the journey from Murmansk through the Himalayas to China is probably the biggest pipeline project ever created in history, should that be on the table for Russia. And we should remember that the only pipeline currently being in place from Russia to China on natural gas is the Power Siberian line running from the eastern parts of Russia into China. And it took them more than 10 years to build that pipeline. And that was with the help of Western natural gas and oil companies. Now they're sanctioned. They won't get any help from Western companies. Maybe they will get help from Chinese companies, obviously. But I mean, my best guess would be that such a pipeline will take at least 10 years to build. So roughly 75% of all natural gas exports from Russia ultimately ends up in Europe. And by the end of the day, they don't have any clients to replace that with. So the recent sort of signals that we've received from the Russian economy when we get the leaks from the Russian administration to Western medias is that the Russian economy will take a hit of about 10% this year alone because of the lack of natural gas exports, because of the sanctions, etc. And I mean, I could easily envisage a hit of the same size next year unless they start reselling the natural gas to Europe. So, oh boy, they are stuck in a mess as well. But obviously, in a dictatorship, it's easier to just tell your population to shut up and, I mean, face the consequences of a huge recession. That's trickier in Europe. So that could argue that Putin has more patience than the Europeans. But if the Europeans can glue everything together this winter, I actually find it feasible that Putin will be back at the table next spring.
And this is where the sort of geopolitical stakes could not be higher, because you're trying to anticipate, inside the mind of Putin, which is very difficult. And, inside the mind of European citizens to see whether they'll stay the course as well. What's your take on the relationship between Germany and Russia?
Well, it was almost a brotherhood for a couple of decades. We should remember that a couple of German chancellors have been paid by the Russians over a time span of 10 to 15 years to ensure that this running gas flow from Russia to Germany was sort of the main supply of stable energy in Europe. So, I mean, oh boy, we've been gullible in Europe when it comes to this energy policy. And as soon as the Germans started to close down nuclear capacity, Putin obviously found his window of opportunity to strike in Ukraine, because, I mean, the Germans had no other opportunity than to just wait and see initially because of the importance of natural gas flows. They've now partly substituted those gas flows, meaning they have a larger confidence in trying to sort of strong arm Putin. But I think by the end of the day, the reason why Germans were so slow to react to the crisis in Ukraine was the exact issue that natural gas from Russia was the main source of stable electricity.
But he's kind of used the nuclear option, hasn't he? He's cut off the gas. So that was the threat hanging over. Now that that's happened, what other leverage is there?
Well, I mean, I've tweeted that the other day. If you look at the natural gas price right now, it's basically quite some distance from all-time highs, and we have zero flows running from Russia to Germany. So can we even be negatively surprised by now on the supply side? I don't really think so, unless Russia starts bombing other pipelines or whatever, right? So they really need to find a nuclear option to meddle with the supply to an even larger extent in Europe. So that provides me with at least a bit of comfort ahead of the winter that Russia has basically played the entire hand by now on the supply side, which allows Europe to sort of glue everything together this winter and get back to the negotiations table in the spring next year with a better bargaining power.
By the way, I should have chosen a different phrase because I know our very smart audience is thinking, but the nuclear option may be the thing that we need to worry about. And so obviously I was referring to like he's played his ultimate hand, not the actual nuclear, which I'm gonna leave for the geopolitical conversation for now, because obviously that's a huge concern. So if we kind of bring the markets into this, Andreas, you just mentioned, let's start with nat gas because you just mentioned it. So do you think we've seen the high?
Yes, I certainly think so. I mean, with zero flows from Russia to Germany, I struggle to see how we can get a downside surprise on the supply side. And we already know by now that the demand side is falling apart as a consequence of production halts due to the high prices in the energy space. So the demand side is slowing, while the supply side will likely remain stable at these levels, around 60% of usual flows on total. So overall, I think it's a really bearish outlook for natural gas over the next 3 to 4 months. And by the way, also for electricity. We may get side effects in heating oil, for example. So we could see increases in heating oil as a consequence of people substituting away from natural gas to heating oil. But on natural gas in isolation, I'm extremely bearish, actually.
Because it's incredible to people to think we're in the middle of an energy crisis and both of these things would be moving lower.
But I mean, by the end of the day, we need to look at what is already priced in. I've been very vocal 3-4 months back that Europe was stuck in a big mess, that we needed to price electricity prices at higher levels, and that natural gas prices were also too low as a consequence of the ongoing mess with Russia. But by now, we cannot be negatively surprised on the supply side. And I mean, given what's already priced in, I struggle to see the negative news coming out anytime soon as a consequence of Russia playing in its entire hand already.
And do you feel the same way across the commodity sector?
Yeah, I mean, I'm long the SALL ETF myself, so this is a very broad-based short commodity position. It has started to perform pretty decently over the past couple of weeks. It is, by the way, up 11% in the matter of 3 months. So I actually think that we have peaked when we look at the broad commodity space. We will re-enter that long-term secular positive commodity story probably in 9 months from now or thereabout. But for this winter, I think we will head much lower because the demand destruction is now visible across the board. And it should be even more visible when we get the PMIs out of Europe, out of the US, out of Japan, out of Korea in a month or two from now. Right about every PMI will be headed substantially below 50 as a consequence of already observed energy prices.
What should we expect in terms of recession for Europe? So commodities are going lower, but they're going lower because demand is being destroyed, which means lower economic growth. People aren't spending. They're worried about their jobs. They're worried about, this sort of impact this will have on the European economy. How bad is this recession likely to be?
Well, when I look at the German economy and make a regression on the German gross domestic product against energy prices, I get a very negative result as a consequence of already observed prices. So I'm not using future prices, I'm using observed spot prices in this model. So what I do is that I make a regression on German GDP based on natural gas prices, electricity prices, and fuel prices, right? And the signal being sent by this model now is that we should expect a contraction of in between 6 and 8% of GDP just because of observed energy prices. Of course, politicians can mitigate this partly by, investing and bailouting everything. But I mean, by the end of the day, there is no way around it. Germany will be hit by a severe recession this winter.
I interviewed Vincent Deloard from StoneX a few weeks ago, and he had a really interesting observation that you should fly with the pigs. And he was thinking that Southern Europe would do better relative to Northern, and that the real pain was going to be in Germany and the northern part of Europe, almost flipping what happened in the past. So the core is where the worst of the downtrend is, and the Southern, because of the weather helping them out with energy prices, would perform a bit better relative to the North.
I tend to disagree. The reason being that Germany and France are the two main exporters of electricity in Europe. So more than 60% of the entire amount of electricity being exported around the European Union comes from either Germany or France. So if we get a situation with energy scarcity or electricity scarcity across the European continent, why on earth should Germany and France decide to export parts of their electricity production? I don't really get that. We already see the first signs now that Germany is not reselling the same amount of natural gas as they were before this Russian invasion of Ukraine. So of course they've decided to fill up their own storages before they're filling up other storages, right? It makes a whole lot of sense. If I were a German politician, I would do the exact same thing. We obviously have a very important election coming up in Italy in just a short while. And my best guess is that the Italians will have to fly to Moscow to ensure their own storage of natural gas ahead of the winter season. In Italy, more than 50% of the entire electricity production is based on burning natural gas. That same amount is only 15 to 20% in Germany. And less so in France. So Italy is the country most exposed to the natural gas situation in terms of electricity production. So Italy is stuck in a bit bigger mess than Germany, in my opinion. But there is a pocket of strength, and that is the Iberian Peninsula, so Spain and Portugal, because they have pipelines to the northern parts of Africa. So they receive natural gas from pipes from northern parts of Africa, but they don't have pipelines from Spain to Germany. In terms of natural gas pipelines. So Spain is basically flooded with natural gas right now, quite interestingly, and there is not even an electricity crisis in Spain. So, if shit hits the fan, pardon my French, I'll fly to Spain this winter.
Yeah, maybe you and the entire continent. Look out, which would be good for real estate, which remember never recovered from. And gallows humor. This is nothing to joke about. It's horrible what we're talking about. So you just said something really, really important, I think, and that is strain on the union. This is what we keep coming back to in this time of crisis. We always see how difficult it is when you've got one currency and you've got all these disparate nations, and now you're dealing with the issue of, do you put your citizens first or do you put the union first? Are you in any way concerned about? Obviously, the European ECB, the European officials, have been working hard to make sure that we don't have strains hitting certain countries over others. But is this going to intensify that pressure?
I think so. They obviously presented a new program called the TPI a few months back, designed to ensure that spreads between Southern European debt and Northern European debt was kept under control. But by the end of the day, I think it's designed to keep Italian spreads under control, which is why I've labeled it a temporary protection of Italy, TPI, right? So I think Italy is the country to watch this winter, as a consequence of their reliance on natural gas and the electricity production, but also as a consequence of the upcoming potential administration after the election, because I find it very likely that the right-wing parties will be able to form some sort of alliance after the election. And that alliance could very well be headed to Moscow just a few weeks after being voted into power. We've already seen Matteo Salvini, so the head of one of the three parties likely to form an alliance after the election, stating that he's in favor of giving up on sanctions and negotiating with Russia already now. The Germans will never accept this. So I think by the end of the day, there is a chance that the Italians will sort of move on their own. We've already seen a couple of countries within the European Union doing so. The Hungarian politicians have been flying back and forth to Moscow to ensure the flow of gas to Hungary. So remember that Hungary is already a member of the European Union, and they are not kicked out even though they trade with the Russians, circumventing the sanctions. So I think the same will happen to Italy. They will be allowed to trade with the Russians.
Which brings up a lot of interesting issues and pressure for the rest, because does it isolate those countries, or does it just crack the entire solidarity of Europe? Because if certain people are able to, then and you're suffering in Germany or France, or then why, well, those citizens would be asking, well, why can't we do the same? Or why are they getting special, preferential treatment?
Yeah. So by the end of the day, the European Central Bank, they've got a big task ahead of them for this winter, right? They will have to glue everything together again, which is why I ultimately don't think that they will be able to continue with rate hikes to the extent that we've seen on the meeting this week and the last meeting. Because, I mean, by the end of the day, they have a bigger mandate than just the inflation mandate, and that is gluing the euro system together when it's needed. And it will be needed this winter again. And we can see it right now, right, Maggie? The release valve is the FX channel via the US dollar and via other currencies. The euro is the weakest we've seen in a few decades, more or less. And I mean, I don't really see anything changing that pattern right now.
That was my next question. And we just had a whole show with Weston on why it's important to watch the FX markets right now if you want a kind of the least polluted view on what's going on. And so you see that not only as dollar strength when you're looking at it versus the euro, but also just the bet that the ECB will not be able to continue hiking rates given the I want to say humanitarian crisis, but energy crisis, impact on citizens. What about all this fiscal stimulus coming, though? Doesn't that potentially make the inflation situation worse? Or is it going to be offset by the fact that you're going to have...
We would never get inflation under control in Europe unless we had global impulses helping us, because I think the Federal Reserve is doing a pretty decent job now. They weren't 6 months ago, but now they're doing a pretty decent job of bringing inflation lower. I actually think that we can see the first signs of inflation heading lower in the US, and that will help in Europe as well. But the ECB cannot control inflation by itself because they have a bigger mandate than the inflation mandate, and that is gluing the euro together when needed. And I think that mandate kind of surpasses the inflation mandate in importance for this winter. So they will have to utilize this temporary protection of Italy program, as I call it. They will probably have to cap yield spreads between Italian debt and German debt, and they may even need to restart purchases of bonds in France and Germany as well, unless they want to see bond yields going bananas. And I don't think
QE
they would
again.
like to see that. Yeah, why not? I mean, I think it's in play. I think recently, probably a week ago, the Bank of England published a press release, and they sneaked in a small message saying that if the auctions are bad enough on gilts, for example, then the Bank of England will step in and buy the bonds. So that's kind of the loophole that they can utilize. If the demand for bonds worsens, then they could start buying them instead of the private market. And I think some kind of loophole reminiscent of that is very likely to be presented by the European Central Bank as well.
So interesting. So not QE on a schedule, no matter what, we're going to be shooting money into the system, but we're as a backstop, QE as a backstop if things move in a way that we are uncomfortable with. So sort of more as an intervention.
And in contrast to the QE program, this will be direct monetization of the auctions of sovereign bonds, right? So in QE, you buy them in the secondary market, but the message sent from the Bank of England was basically that they could now envisage buying them in the primary market. So when there is an auction and the auction is not filled, then the Bank of England could step in. That is direct monetization of public debt.
So how are you trading all of this, Andreas? I mean, there are a lot of cross currents. I'm still actually trying to wrap my head around everything that you're saying, because I think there's some really, really big, important themes here that haven't been talked about enough, because everyone's too busy screaming about whether they're going to run out of gas and freeze this winter or not. I mean, this is exactly why we wanted to sit down and have this conversation. So how do you trade this? And I'm going to ask that with a time horizon, because I think you rightly pointed out that a lot of the stuff you've been tweeting about, you're tweeting about really like the next 4 to 6 months, like the winter period. So how are you trading this? How are you trading this?
I dipped my toes into a long euro versus US dollar trade. Was it 3-4 weeks back? Not with a lot of success, to be very honest. So what I've decided to do now is just to place my excess cash in US dollars. I think that works as a very decent hedge as a European. But other than that, I'm short the commodity space with an arm and a leg now, because I think from the supply side, we're not really able to get any bad news, given that the flows are already zero from Russia. That should also be helpful for the spillovers to oil, etc. And secondly, I think it's now crystal clear that demand will take an even larger hit than anticipated by many over the coming 3 to 4 months as a consequence of already observed energy prices. So short commodities, long the US dollar, a classic risk-off trade. And then I'm long the S&P 500 versus being short the DAX, so the German equity index, as a proxy trade of this energy crisis, you can say. So those are kind of my 3 key takeaways from all of the stuff that we've been through. And do note that even though I'm trying to be a bit more optimistic than the consensus on Europe, I'm not really willing to buy Europe as a financial bet. I'm just saying that we're not going to freeze. I think that's unlikely, but we're still stuck in a big mess this winter.
Yeah, I think that's a really, really important, because like somehow the middle ground is unacceptable anywhere. Like if you're just trying to say, well, I think we've gone too extreme, then you are suddenly part of the other extreme, which is I think a bad trap we'll have to avoid falling into, because real life is probably much more nuanced, always in the middle someplace. But I wanted to ask you, I'm glad you brought up equities. I wanted to ask about that. Do you think, I haven't heard anyone who said, oh, I'm buying, or I'm long Europe, anything really. But do you think that the severity of the recession is priced in to equities, European equities, or bonds, or anything in Europe?
No. I think the severity of the potential upcoming recession in the US is priced in, but I don't think it's priced in Europe. The way I look at this is that I usually map the main indices against the PMI index in Europe, and look at whether the market has gotten ahead of itself when it comes to the pricing of a recession. And in the US, we had NASDAQ trading at levels equivalent to 40 in the ISM index. But if you look at the DAX index versus the European PMI index, the DAX is probably trading around 45-ish on the European PMI. And I mean, given the severity of this crisis, I would be very surprised not to see the European PMI headed below 40. And maybe even to levels of 35 or thereabouts. So the depth of this recession will be as bad as the swift recession of April 2020. So PMIs at a magnitude of 35 to 40 is probably where we should aim. And that allows for at least 10 to 15% further downside in the DAX.
Wow, that's 10 to 15% further. That's why you're shorting it. And will that be the case across all European equities, or maybe not?
Well, I think
Spain?
It's tricky to find any bright spots. Spain is probably the place to hide. if you want to hide somewhere.
If you have to be in Europe. I mean, there are probably very few who do, but if you have to be in Europe.
Yeah. But I guess you can find some bargain trades in 3-4 months from now. There will be bodies on the street in terms of financial positioning, and blood on the street, right? So, I mean,
if you have a long time horizon, we should probably put that in there. Then those people might come out of the woodwork. And so, last question, Andreas, and obviously this is going to have to be the first of an installment because this was, I think, such a great conversation about what's happening. But people will say, you're European. Are you biased because you're European? I know you always have your trader hat on and you're trying to look, rationally at probabilities for these things. But do you think that influences you at all? Or do you think that the fact that you're over there gives you an advantage to see what's really going on?
I mean, Maggie, let's be honest. I am emotionally involved in this energy crisis. I'm right in the epicenter of it. So obviously it is tricky to remain 100% unbiased through such a crisis, because I mean, I tend to get into heated discussions every time I discuss this with people with a different view than me. And I perfectly admit to that because, of course, it's kind of overwhelming in a negative sense. That we are now in the hands of Mother Nature. There is a clear risk that we will run out of energy. I mean, it's not stuff that you expect to experience, right? So of course there is a risk that I'm not seeing this clearly. I have to admit that.
Our friend Denise Scholl, who comes on the show from time to time, and there's a podcast I just did with her coming out, would say that every decision is based on emotion. Some people just admit it and some people don't, that there is no such thing as a completely rational decision. So appreciate the caveat, but you're probably identifying what, ahead of time, what Denise would say is true. But it's a very severe situation, but it's important, I think, to have, a clear conversation about it and not sort of get caught up in the headlines. And I think it's really, really interesting, the idea that there's a lot of disinformation out there. So hopefully we did a good job today, Andreas, of trying to break down some of it and get a clear picture of what's happening.
We did our best, Maggie.
We did. Thank you so much, Andreas. And we'll come back to this again in a couple of weeks. Keep us posted.
Thank you so much, Maggie.
First of all, the polarization and disinformation that's so prevalent in political circles may also be at work in the energy space. I'm not sure I was paying as much attention to that as I should have been, particularly the potential for disinformation campaigns. The Danish intelligence outreach floored me, and you can believe that we are going to be having follow-up conversations with Andreas on that. Secondly, as Andreas has been tweeting about, he thinks the doomsday scenarios about Europe running out of fuel this winter are overblown. As long as the winter is mild, he thinks they can manage through it. And he believes nat gas and electricity prices will fall sharply in the coming months as a result. In fact, he believes the commodity space overall has downside risk due to the demand destruction happening on the ground right now. And he's playing a short commodity ETF to support that view. On that note, though, and this is important, time horizon matters. Andreas's bearish commodity view is for the next 4 to 6 months. Beyond that, he believes Europe's energy problems and challenges are going to persist, which will create a bullish backdrop for commodities. So the bearish view is very short term for him. 3, if people are too gloomy about the energy shortages, they're not worried enough about the coming recession in Europe. Andreas thinks European equity and bond prices need to adjust accordingly. He thinks, for example, the DAX could face another 10 to 15% downside. 4, European officials responded quickly to the liquidity squeeze that hit European utilities this week, and they are drafting these massive bailout plans to assist businesses and consumers. But that stimulus which in some cases could reach 10% of GDP, is moving money away from funding a longer-term solution. That capital is going to need to come from somewhere. Number 5, So Europe's in a bind, but so is Russia. Andreas has been talking about this a lot. And it's not that he thinks Europe is in some good position, but he just thinks Russia is really strained as well. He's been talking to a lot of energy experts, and he feels strongly that there isn't the infrastructure to allow Russia to easily divert nat gas sales elsewhere, and their economy is taking a hit. He thinks that might set up a scenario where Russia comes back to the bargaining table. On that point, watch Italy closely. They're most vulnerable to nat gas shortages. An election is looming. If things get tough this winter, Germans will be less likely to export any energy out to the south. You could say that for any country that does have any energy supply. The European solidarity will be strained. Andreas finds it hard to see how the ECB can hike against that backdrop. Keeping the union together will override the need to get inflation under control. They're going to have to rely on the Fed for that.
We hope you enjoyed the video. At Real Vision, we help you understand the complex world of finance, business, and the global economy with in-depth analysis from real experts. Join the revolution at realvision.com.